Here we go. Money talk.
Here comes the money.
What's going on YouTube? It's your boy Stock Brother bringing you those bangers. On this channel, we review hot stocks and are always looking for those hidden gems. If you haven't already, subscribe to the channel and smash that like button. Join the family by subscribing to the Patreon so we all can get that paper together. Make sure to watch the whole video so you don't miss all the juicy information I'm bringing to you. Today, we're going to be discussing the top 3 stocks to beat the bear market. Now, before we get started, we're going to take care of some business, then get right into it. If you're new to the channel, this channel is about making that money, investing in stocks, and of course, making more money. So before we get started, subscribe to the channel, hit that notification bell, and smash that like button. Don't forget to share the video with your friends and family so we can all get that paper together. If you want to support the channel, hit up the Patreon, and as a bonus, you get real-time alerts of when I enter and when I exit my stocks. It's an easy way for you to see what I'm doing and to follow along. We're getting that paper, baby. The first stock on the list is MRVL Technology, ticker symbol MRVL. This stock closed at $83.59, and it was up over 17% for the day. They had a gain of $12.56. The year range for this stock is $37.92 on the low and $88.49 on the high. Now, as you can tell, the stock hit its high on Friday, so it's been going bananas. A little bit about this stock. Now, MRVL Technology is an American company based in Delaware which develops and produces semiconductors and related technology. Founded in 1995, the company had more than 6,000 employees as of 2013 and 10,000 patents worldwide, an annual revenue of $2.9 billion. A lot of you may not have heard of this company, but you're going to want to pay attention to this. According to MarketWatch, MRVL will be in the same camp as AMD, Nvidia, after one of the best semiconductor earnings calls. The article states the stock jumps more than 17%, its best day since 2008, as analysts describe chipmakers' earnings as watershed quarter. The article continues by stating that shares of MRVL Technology experienced their best trading day in 13 years after an earnings report that led analysts to predict chipmakers' ascension into the top tier of hot semiconductor stocks. MRVL shares increased 17.7% Friday following the company's fiscal third quarter earnings report, which saw MRVL top expectations for its latest quarter, issue an upbeat forecast for current period, and offer encouraging longer-term commentary. The stock posted its largest single-day percentage gain since December 3rd of 2008, when it rose 20%. Chief Financial Officer Jean Hu said on an earnings call late Thursday that she expects continued strong demand across our end markets and improvement in supply to drive our top-line revenue growth above 30% in fiscal year 2023. That projection generated enthusiasm, as did MRVL's January quarter revenue forecast that implied upwards of 60% growth. The company's earnings call could have been one of the best, if not the best, semi-conference calls I have listened to in quite some time, quoted Mizuho desk-based analyst Jordan Klein in a note affiliated with Mizuho's sales operations and not its research team. He states, "In fact, it was a game changer for investors and in my view squarely positions MRVL as a best-in-class growth semi into cyclical year 2022, he continued. MRVL will be in the same camp as AMD and Nvidia, he argued, amid the company's cheery growth projections and likely expectations among the bull camp for $4 a share in annual earnings power within a few years. The company has a clear line of sight, given a backlog full of design wins that has basically locked in that growth rate. on the revenue line, he quoted. Further along in the article, it states that Klein wasn't alone in likening Marvel to a red-hot chip stock. Marvel just pulled an Nvidia on the street last night, he stated, with an unambiguous beat and raised and taking fiscal year 2023 sales growth to over 30%, according to Rosenblatt Securities analyst Hans Mosman. Marvel's report sparked at least one upgrade from a research analyst, Cohen and Company's Carl Ackerman, who lifted his rating on Marvel stock to outperform from market perform. He states it's hard to argue this was anything but a watershed quarter with a triad of better results, better guidance, and expanding design pipeline that anchors a new F3 guide. Ackerman cheered Marvel's recent evolution, anchored by portfolio optimization, progress that has made the company increasingly competitive in his view. Marvel has transformed itself from being a fast follower to a market leader of providing semi-custom integrated ICs on leading-edge silicon that address bandwidth friction existing in today's networks, he wrote, while increasing his price target to $100 from $60. This company seems to be doing some great things, so we really need to keep our eye on this one. According to the Motley Fool, Marvel was able to successfully navigate global supply chain bottlenecks at a time when many of its competitors are struggling to obtain the raw materials they need for manufacturing operations. During a conference call with the analyst, CEO Matt Murphy stated, "Our operations teams continues to do a great job in sourcing incremental supply, and we are starting to see the fruits of their labor. Supply was better than expected in the third quarter, and we expect continued improvements as we move into the fourth quarter and next year. The additional capacity has better positioned us to catch up to the growth in demand, which so far has outpaced increases in supply." According to TipRanks, this stock is rated as a strong buy. Now we can see that there are 22 analysts covering this stock, 20 with a buy and 2 with a hold. The median price target is $99.41, which is an 18% upside. The highest price target is $120, which I believe this stock is on its way of hitting. Don't sleep on this company, guys. In my opinion, this is a shining star in this bear market. The next stock on the list is ZNGA, ticker symbol ZNGA. This stock closed at $6.11 and it was up over 5% for the day. They had a gain of 34 cents. Now this company is near its year lows. The year range was $5.57 and the high was $12.32. A little bit about this company. ZNGA is an American social game developer running social video game services and founded in April of 2007 with headquarters in San Francisco. The company primarily focuses on mobile and social networking platforms. ZNGA states its mission as connecting the world through games. Now we've all been hearing about the Metaverse, and according to the Motley Fool, this stock could gain profits from the Metaverse. The article states that ZNGA has long tied itself to the Metaverse. It launched its IPO while benefiting from a special relationship with the company known as Meta Platforms. That relationship ended in 2012 and the stock gained little traction until Frank Gibeau became the CEO in 2016. Under his leadership, the maker of Farmville and Words with Friends added franchises and enhanced ZNGA's ability to support games across multiple platforms with the purchase of extra games. Moreover, the company has turned in-game advertising into an increasingly important revenue source. This allowed the company to derive revenue from its 2020 purchase of Rolik, a maker of hyper-casual games, which are free-play games with minimalistic interfaces. ZNGA also increased its ad-based profile by Chartboost, a platform Gibeau described as an increasingly important competitive advantage on the Q3 2021 earnings call. its software connects marketers to audiences through ads. The article continues by stating, with that help, ZNGA grew its ad revenue 99% in the most recent quarter, likely due to increased emphasis on monetizing ads. Overall, revenue for the first 9 months of the year came in at $2.1 billion, surging 55% compared with the first 3 quarters of 2020. The company has also pared losses in the first 3 quarters of 2021 to $37 million, an improvement from the $376 million loss during the same period in 2020. Slower growth in expenses helped to dramatically pare losses. The company also announced a multi-year partnership with racing icon Ken Block for CSR Racing 2. According to this article, the company announced that Natural Motion, a subsidiary of ZNGA, is the official game partner of professional rally driver and internet phenomenon Ken Block for the popular mobile drag racing game CSR Racing 2. In the game, players collect and tune the hottest and latest cars to compete on tracks, all in unsurpassed state-of-the-art graphics and high visual fidelity. So this company has a lot going on. According to TipRanks, this stock is rated as a strong buy, with 13 analysts covering it, 12 with a buy and 1 with a hold. The company has a medium price target of $10.58, which is a 73% upside. The highest price target is $13. So again, the metaverse is all the rage right now, so this is definitely one to keep your eyes on. The next stock on the list is BNTX, ticker symbol BNTX. This stock closed at $344.06 and it was up over 3% for the day. They had a gain of $10.57. The year range for this stock is $80.55 on the low and a high of $464 on the high. Now this company is going to continue printing money because of this pandemic. Now a little bit about BioNTech. It's a German biotech company based in Mainz that develops and manufactures active immunotherapies for patient-specific approaches to the treatment of diseases. BioNTech partnered with Pfizer for testing and logistics, developed the RNA vaccine for preventing COVID-19 infections, which offers a 91% efficacy in preventing confirmed COVID-19 occurring at least 7 days after the second dose of vaccine. According to BioNTech CEO, the new mutant virus signals a need for annual shots. Now, in this article, it states that the vaccine stocks jumped Friday after BioNTech chief executive said the emergence of the highly mutated Omicron variant signals the need for annual COVID boosters. The variant emerged last month and carries a number of mutations to its spike protein. These could help it elude vaccines. Vaccines from Moderna and BioNTech, with its partner Pfizer, introduced the body to spike proteins to introduce an immune response. BioNTech chief executive Urgar Sahin says Omicron could lead to a greater number of infections in vaccinated people. Researchers say the variant could be more transmissible, though it's still unclear whether it will cause more severe cases of the respiratory illness. The Biden administration is expecting a surge in COVID-19 infections for the winter. So again, this company is going to be printing money because COVID seems like it's here to stay and it's not going away anytime soon. Now that's all I had for today. Comment down below, let me know what your thoughts are on the stocks that we did discuss. And if you haven't already, subscribe to the channel and smash that like button so you can help my channel with the YouTube algorithm. So until next time, let's get that paper.